Global equity markets at all-time highs. A bad sign? With global equity markets at all-time price highs, some are worrying, how far could prices still rise? Is this a bubble? Does this mean the equity market is too expensive? Let's have a closer look. In this chart, you see the global equity market development with the recent all-time high at the very top of the chart. And to mark this, I've made a green dot for this all-time high. And if you look closer in the history, you see a lot of green dots. Every green dot is the market at that point reached a new all-time high. Let's develop a strategy. Was it a good idea to sell the market once it hit a new all-time high? Once it hit a new green dot? Look for yourself. And you will see there are long stretches where one all-time high is followed by the next green dot, and so on. How can this be? Statistics even show if you are buying at the green dot at an all-time high, the following performance, the next 12 months, the next 3 years, was even better on average than over the total history of the index. Historical data, future can be different, but still quite remarkable in my view. Where does this come from? Well, most of you will know, and this chart here shows this explicitly. You have again this price development from the previous chart. The same idea. How does the prices of this global equity market index rise over time? You have volatility, the recessions, the crisis, but over time this upward trend. Where is it coming from? It's doing the same as the other line in this chart. The other line is how much are the companies behind this equity index really earning, company earnings. And they are rising over time as well. Just think about it. Take this global stock index with these 1,500 companies roughly behind it. What do you think in 10 years from now? Will the sales of those companies be higher than now, the same level or smaller? Very likely that the sales in 10 years will be higher of all those companies combined because price levels will have increased over the next 10 years, inflation every year, and world population is higher, more people producing more, consuming more. Sales of the economy in total, of this huge global index, will be higher in 10 years, therefore also the companies earning more in 10 years, therefore also being more valuable at the equity market. You have one line, the price development of those companies, this index, and the other line, how much are those companies earning. And you see this is more or less over time the same trend. So when can you talk about an equity market bubble? When have prices then really increased too much? And according to this logic, it would be when prices of those companies, the stock index, has risen much more than what the earnings of those companies have risen over time. You see a quite remarkable point in time. I marked it with a circle, the first circle, where the equity index had risen much more than the underlying earnings development of the companies. And this was, you might have guessed, around 2000. What was then? Internet bubble, prices were taking off, but the earnings were lagging behind. And you had this huge divergence. Then companies were really expensive. The equity index were expensive, not because of all-time highs, but because prices had risen faster than earnings. There's an indicator for this, price-earnings ratio, how high is prices divided by earnings. Price earnings were very high at that point. What happened? The bubble popped, prices came down. On the other hand, when was the market really very cheap? 2008, 2009, you see it here, that's the second circle. Prices, the equity index had fallen much more at that point than company earnings had come down. You had very low P's, a good entry point. What is positive for the future? If you look at the very right of the chart, the development of earnings and the development of the price index are very close together. If you look closer at individual regions, and you have it here in the chart, these price-earnings ratios, how expensive are those markets currently, you see that on the left, markets, especially the US, basically is pretty expensive historically because prices have risen so much more because there's a high expectation that artificial intelligence will boost future earnings. If you don't believe this and you are worried about this high price earnings, just look at the middle of the chart, look at the right of the chart. There you have all the other equity markets in this world where prices are in the middle range, far from expensive, or even still cheap at the very right-hand side, which is basically Central Eastern Europe and China and Asia. So I hope you're more relaxed now with new all-time highs on the market. What would make us relaxed, of course, if you hit the subscribe button and give us a like. All the best for your future investments. See you next time.